Welcome to the Bloomberg Markets Podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets Podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast. Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Broker Studio. John was just reporting on American Express, AXP. Blockbuster numbers beat estimates, looks like a record quarter. Stock's down at 4%, so I'm sure the market maybe, didn't like the guidance here. But let's check in with somebody who actually knows this stuff. Ben Elliott, he's an analyst for Bloomberg Intelligence covering the consumer financials, and that includes American Express. Ben, thanks so much for joining us here. What's the takeaway from our good friends at American Express?
Look, Paul, AmEx is still the best card company to own if you're gonna be interested in this space. But the macro fears are weighing on the entire industry. They're essentially plays on GDP, and with people afraid of a recession to come, AmEx can't kind of escape what's weighing down the entire sector, even though they're probably twice as good as their nearest peer.
In what sense are they twice as good? You mean in terms of profit margins, in terms of returning money to investors, in terms of, growing the top line? How are they so much better?
Yeah, I mean, basically everything you mentioned. They're running loan growth runs well above peers. Charge-offs run less than half the rate of their peers. ROE in the mid to high 30s, which is really the envy of everyone in the card industry. So if you had to kind of bet on one, and really the core of AmEx is the super premium consumer base. These are people paying $700 a year to swipe their Platinum card. So if you had to bet on one group of consumers doing well in a recession, it would be AmEx cardholders.
See, I stick with the classic green card.
Not me, dude.
No, I mean, I'm classic, old school, green Amex. That still has cachet for me.
I got the Platinum card with little flowers painted on it. They may be hand-painted. And I felt so special until I read this story that they've attracted new card holders at like a record pace in the top tier. And actually, I already felt this. I already feel this when I go to the American Express Platinum Lounge at the airport.
Yeah.
And there are more people trying to get in the Platinum Lounge than like going to McDonald's.
I'm telling you.
It's like I don't feel at all special anymore. Is that a problem, you think?
Well, here's the other side of that
Not just
equation.
for me, but for Amex.
The other side of that equation, Matt, is that they spend a massive amount of money on marketing, $5.5 billion this year, targeting the same next year, and they have to provide benefits to their customers to keep signing up new cards at the rate they've been doing. So their card fees, which are really a key earnings lever over the last year, growth there is slowing. So I think some of what you're seeing in the market today is probably seeing some of these key growth areas starting to slow.
What's the difference, if any, Ben, between an Amex cardholder and a Visa cardholder? Is there different spending, levels, trends? How do you think about that?
Yeah, so Amex is very focused on travel and entertainment. Both of those things have lagged in the post-pandemic recovery, so that's kind of given Amex these sort of long legs to do better over the last couple of quarters than some of their peers who are more focused on everyday spend, goods and services, gas stations, for instance. So you saw a Discover report a couple days ago. Their provisions almost doubled, and that's kind of reflecting their middle market consumer who's really being hit by inflation at the gas pump. And for the most part, Amex customers are not hit by that. They're out there buying Taylor Swift concert tickets, traveling to Europe, those kinds of things.
All right. To be honest, the only time I use my Amex card really is when I use my corporate Amex for business travel. What's Amex?
That's because Paul walks around in the world with a giant roll of cash. I'm not joking, right? So he always has like a ton of Benjamins in his pocket still.
Okay, you just set him up to be mugged when he
walking
leaves
out of
work
Yeah,
today.
but it's unusual is my point. Not everybody uses
Exactly.
Why don't you
cash as much as
describe
you.
him to people?
Exactly. I'll be walking out of the office at 1:05 today. So, Ben, what are they saying about business travel, business spend?
So business is people think of it as sort of a core part of Amex's customer base, but it's an increasingly less relevant part. Nowadays, the biggest growth engine is the U.S. Card business, and a third of that is millennials and Gen Zs, really. So, AmEx is forward-thinking. They're still serving their corporate customers, but it's not sort of a key part of the value proposition anymore on the growth side as they look forward.
I mean, it's not the... So in the past, when you wanted the ultimate credit card, you got the American Express Platinum card, right? Yep. Now, there's this whole line of Sapphire cards, which are, I think, Visas or MasterCard, but other banks have offered competing products. Do you see competition hotting up against AmEx?
Yeah, competition is huge. It's always been huge in this space, especially sort of top of wallet share. Every card company is opening an airline lounge. So, it's been the case for the last 20 years. Everyone's always calling out AmEx, saying they're catching up. But they do the necessary investment every year. They're going to spend $5.5 billion again next year, and their card is on about a 3-year refresh cycle. So, in the next year or two, we're coming up probably on another refresh where you'll see them, if anything, add to the value proposition and probably raise the fee.
The shares are at a 3-year refresh cycle. I mean, we're right where we were at the beginning of 2021. Are they going to move higher?
Yeah, so AmEx is still quite fully valued relative to their peers. They're trading about 4x book, which is way out of line with the 1.5x of the peer group, and they're 14x price to earnings. So I think some of the pressure you're seeing there is, they've set ambitious growth targets and they've met them over the last couple of years, but you can only grow so fast off a big base. So I think the market is getting a little bit skeptical of the 10% revenue growth target in the forward years. And so I think that's what you're seeing reflected in the stock today.
All right, Ben, thanks so much for joining us. Ben Elliott, he covers all the consumer financial companies for Bloomberg Intelligence. He's based down in Washington, D.C. AmEx put up some big numbers. Stocks off about 3 or 4%, though. Maybe as John Tucker suggested, buy the rumor, sell the news, or maybe the guidance here probably was a little bit less than stellar.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
All right, listening to Fed Chairman Jay Powell yesterday at the Economic Club of New York in his speech and then in his fireside chat with Bloomberg's David Weston, I came away, and I think the market came away with, all right, the Fed is going to stay on hold here, but they're also keeping future hikes on the table. That seemed to be the message, and that seemed to be the consistent message. Let's see if it's the same message that the good folks at Citi are talking about. Stephen Wieting, he's a chief investment strategist at Citi Global Wealth. So, Stephen, again, it appears that this Federal Reserve is comfortable with where we are on rates here, and maybe even another rate hike on the table. Is that how you guys are thinking about it over there at Citigroup?
I think that was the message of Chairman Powell. He acknowledged that we're making progress. Of course, he pointed to backward-looking inflation is still too high. It's always kind of difficult to have core inflation at 2% when shelter price inflation is still about 7.5%. That's 45% of the core.
Yep.
So the issue is he's acknowledging the progress, and he's especially acknowledging that some of these softer measures of the tightness of the labor market have come off. That the forward-looking signs are weaker, and that the Fed is already at a restrictive policy stance, and it gets more restrictive every month with quantitative tightening. So I think that, again, he's really trying to say that, yes, we've achieved a lot, but we're not going to take it for granted that we are absolutely done. So he's not taking that notion out that the Fed still has the option of tightening further.
I mean, if they're restrictive now, I would hate to see what it really looks like when they get tight. I mean, 5.4% growth is what we're seeing in the Atlanta Now GDP forecast.
Well, that's really
backward
not
looking?
indicative of the year. No, it's not. It's not. It's really indicative quarter to quarter volatility in the economy. No, we're not in the environment where we were in 2020, where we had plus or minus 30% quarter to quarter GDP. But I think a lot of things have surprised to the upside. We've raised our economic forecast as of August by a full 1.5% for the year. What's the striking part of all of this?
What are your forecasts for the year, Stephen? I mean, set us up.
for full year, 2.3 for full year GDP, slowing about a half percentage point, so to about 1.8 in the coming year. And if anything, it could be a little bit more attenuated, the sort of the strength and the slowdown a little bit. The really striking thing about the economy is that in the year past, the growth rate of employment exceeded the growth rate of GDP by the most since 1974.
Wow.
Not a good year.
Wow.
Right. So profits have fallen. We've gone through what I would say is in the manufacturing and trade sectors and components of the housing sector, we've already gone through a recessionary adjustment, at least a mild one. And yet employment growth has been this strong. I think that changes in the coming year, and that we're likely to get some rebound in profits while headcount is going to be a lot more stable. So I think that's the optimistic call for rates. If we just continue to see, regardless of how the economy does, regardless of tightening in monetary policy, employment still rages on, well, then you still have the existing problems that markets have now in not knowing where the top is on rates.
But do you think that turns around, Stephen? I mean, if employment growth was stronger than economic growth in the past year, in the next year, as economic growth slows down, does employment growth take a leg even lower than that? I mean, do we start to
I think
really
we're headed
lose
to a jobless recovery. Yeah, I think we're headed to a period in which, there's no V in the economy. There's no collapse in everything everywhere all at once that everybody's waiting for, like 2020, where it's as clear as day. It can only get better. It's not that, but employment growth, just the industry composition of employment growth, the recovery in services, which took a depression, strange imposed depression in industries that normally don't even fire people. That rebound in services really drove that outperformance of the labor market. And I think it's going to slow. And at the same time, there are areas that are just long cycle, multifamily construction, for example. Now, construction is an industry that normally has, double-digit gains and losses around recessions. It's only slowed. And that's despite a 21% drop in residential investment. But what's happened here is the longer cycle components of construction, multifamily housing, which takes 3 years of construction time, 4 years of planning. Well, the activity right now is still demanding a lot of labor, and it's at a record high share of total construction activity. So that is going to come off. And I think everyone assumes that there's been this really short policy lag. Hey, everybody can get used to the Fed quickly. That might be true in financial markets, but it's not true in the economy. So I think we're headed for a slower labor market in the coming year, despite the fact that profits down in the last year will probably recover a little. Less than consensus, but they're on their way up.
All right, Stephen, given that economic backdrop, what's the investment call coming out of Citi these days? What are you telling clients to do?
Well, look, I think this current period of greater concern about security is something we can't dispute. We can't tell everyone, are we certain that there's no widespread conflict? History shows that in more than 90% of cases, that is true. We're not going to change and create a turning point for the world over regional security issues. I think for the equities markets, everyone has said, well, if we don't know where the top is in rates and oil, then we have issues. But broadly speaking, we've restored value in both stocks and bonds. We've restored, again, near record high real interest rates. If you look at the TIPS markets, again, 2.5% government guaranteed bond yields plus inflation compensation. Think about that. 6% corporate bonds. Now here's another one. Small and mid-cap growth companies, those with good balance sheets and profits, not the ones that have levered up, are trading about 30% below their long-term valuation average, down by a 15 PE multiple. So we started to add there. Not taking a whole lot of aggregate risk, but it's time to recognize those growth opportunities.
We don't see a lot of bargains, do we, Stephen? Because I hear Torsten Slok, I think a couple days ago, sent out a PE for the Magnificent Seven, which was like 45, and for the S&P 493, which was still 19. Now I've heard others say it's more like 16, but it's not terribly below the historical average. And then in terms of credit, you don't see spreads wide. They're still pretty tight.
Well, this is, again, the reason why we're not investing along the lines of just adding S&P 500. For large cap exposure, we're doing equal weight S&P, and we're overweighting again within a neutral global allocation for small and mid cap companies. We found true bargains and small and mid cap growth companies 15 times. The long-term average PE for the sector is 21 times. Now, it's not Russell 2000. Again, that's companies that have grown their earnings about 12% per year for the last 10 years, and largely exclude things like banks that have levered up in the small cap area. So it's being more specific than I think just saying the market. Our return outlook is moderate, I think, at this point. If we're right about inflation coming down, rates peaking, and profits starting to bottom, again, it's not going to be 12% EPS growth like the consensus thinks. We're at 4%. We still think, again, the broader markets will have a positive return, but some of these valuation opportunities are pretty good. And I would say especially the U.S. bond market stands out with some of the highest yields in the world for high-quality investment-grade companies. So it's not a matter, again, of chasing low-quality spreads. It's earning a prospective real yield. And that could be as much as 4% for investment-grade corporates.
Stephen, thanks so much for joining us. Really appreciate getting your thoughts and insights there. Stephen Wieting, he's a chief investment strategist at Citi Global Wealth.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's get back to the leading geopolitical issue out there, and that is, of course, what's happening in Israel. Micheline Ishay joins us. She is a professor at the Josef Korbel School of International Studies at the University of Denver. She joins us here. And Micheline, thanks so much for joining us here. What do you believe Israel should do in response to what was almost 2 weeks ago, the terrorist attack? What do you think they should do here?
Well, as any country that has been attacked in an unlawful manner with an intensity and a scope that was unprecedented, it's clear that it has to defend itself. It will defend itself, as we heard in the media, by just sending ground troops now. It took some time to do that because it wanted to sort of somehow shelve the infrastructures of the northern Gaza in order to send its troop. Now, you ask about what it should do. It has the right to self-defense under international law. It has, of course, to be consistent with not creating excessive death that surpass the military advantage, which will be a difficult call. But what it should do and will do will probably be defending itself. And here we all hope that it will be done with international law in mind.
So do you have problems with the blockade that now has kept humanitarian aid out of Gaza? I mean, you could understand the anger, right? Obviously, initially, but then there are over 1 million people in Gaza under the age of 15. So, they weren't even born when the Palestinians elected Hamas in 2006. Is that something that the Israelis need to be better at doing, letting food and medicine and water, maybe even fuel through? Or, do you see that Hamas just takes what they want right away and doesn't care about the rest of the people? And so it's kind of fruitless.
Well, it's probably one of the concerns of the Israelis that Hamas might be taking some part of the humanitarian aid that will be delivered.
Well, not just might be. I mean, definitely, right?
Most likely.
They butcher babies. Likely. They stole already a lot of fuel that went in last week. Yeah.
So there will be an important need of an important triage, the question who is going to be doing it. At the same time, you have, as you said, a humanitarian crisis with close to 1 million of people now trying to evacuate to the south of Gaza, a very small strip of area with a highly densely populated people. So there will be opening as a result of the Biden visit to Israel. There will be an opening of truck delivering food and water. It's very unclear as to what extent there will be electricity, because the electricity can be used also for warfare purposes, but there will be certainly situations in which we will see in the coming days opening in the Rafah crossing, at least from what we hear from the Americans and the Israeli as well.
Micheline, how concerned are you about this conflict, which is currently between Israel and Hamas, broadening out to something that includes more of the Arab players in the region? How much of a risk do you think that is?
It is always a risk. We know that Iran has sponsored Hezbollah and also Hamas. And then we also know that there was just yesterday or 2 days ago, just missiles that were intercepted by American boats launched toward Tel Aviv. So there is a possibility always of a war to spiral in the wrong direction. At the same time, it's worth suggesting that the fact that Iran has been very much weakened, years of protest also in its own country. Hezbollah has become also a very weak party in Lebanon, and Lebanon has been becoming a failed state. So those two countries, though they might want to unify and they might want to show their support to the Palestinians, also are hesitant in full-fledged involvement. So they are waiting. I think that if they see that there is in the north of Israel more infights or missile rockets going in the directions from Israel to Hezbollah, they probably will be further involved. What is reassuring in a way is that the United States has sent its 2 aircrafters onto the East Mediterranean Sea. And in that sense, it provides a form of deterrence to the potential escalation of countries in the region.
And Professor, I guess, can you help us just understand kind of the support that Hamas enjoys in Gaza among the Palestinian people, I guess? I'm just wondering to what extent...
So hard. It's been a question that's really hard to get an answer on.
Do the Palestinians support Hamas, and if so, to what extent do you think?
I think that if you were asking the same questions in October 5th or 6th, you probably will see a lot of dissent among Palestinians with respect to their support of Hamas. Remember that the last elections in Gaza Strip was in 2006, which means it was 17 years ago. Very difficult to assess that level of legitimacy. Moreover, we know that Human Rights Watch have criticized heavily Hamas for detaining, incarcerating, torturing its own people and not being the most friendly when it's come to their women's rights. So a lot of dissent among its population. But you can make the same argument, not quite the same, but a somewhat similar argument with respect to the Israeli. They have distrusted their government now since November 2022. It was an elected government, but still very much distrusted as a result of the protest movement. Nonetheless, during time of war, there is a unity. 300,000 peoples have been mobilized among the reservists to fight that war unconditionally, and among them many protesters. So I will assume that the same will happen in wartime on the other side.
How would a human rights advocate prosecute a war against an enemy that doesn't care about its own people? That even takes refuge in, Hamas military activities come out of schools and hospitals, that use their own people as a defense. How do you prosecute that kind of war if you're concerned about civilian, injuries and deaths?
Well, it is from an international humanitarian law, certainly a very difficult proposition. First of all, as you know, international humanitarian law have to be reciprocal. So it has to be consistent for Hamas side and for the Israeli side. Even if one side does not do it, the other still has the burden of being constrained by those international law. How it prosecuted will be very difficult. Israel has the right to defense with respect to international law, but it has also it's constrained with respect to how it target military versus civilians. Civilians, as you said before, are already part or already embedded in the military wings of Hamas, which makes it very difficult to go after the military wings of Hamas. But what the Israelis have done and have tried, at the very least, it's to, first of all, called for an evacuations of the north side of Gaza to the south of Gaza in order to make sure that the object of target was not the innocent civilians, but the military wing. Very difficult to do on the long run because there will be excessive casualty in the crossfire.
Micheline, thank you so much for joining us. We really appreciate getting the benefit of all your experience. Micheline Ishay, Professor of International Studies and Human Rights at the University of Denver. And folks, I'm just looking at her bio, and she's been everywhere talking about human rights and teaching about human rights. We appreciate getting a few minutes of Professor Ishay's time.
You're listening to The Tape, Kantar Live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
One of the big stories in markets really over the last several weeks and months has been crude oil. And we've got another move higher today, and WTI crude oil over 90. Fernando Valle joins us. He covers all the global energy markets. Fernando, what's happening in the oil market these days?
Well, so much, Paul. It's been pulling in all directions, but especially this past week, we had very large drops in inventories for both crude oil and refined products in the U.S., which definitely added to the geopolitical tensions and bringing oil prices higher over the past few days.
So we have enough here in the U.S. to, even if we're cut off from the rest of the world, to serve our needs, right? Is that true as well as, I know it's true for crude oil. Is that true as well as refined products as well?
For the most part, yes. We have, between the U.S. and Canada, we have nearly 19 million barrels a day of oil production. And then if you add Mexico and some other friendly nations, we're in good stead. On refined products, it's a little bit lower. And the biggest issue there, we are net importers of gasoline, especially into the East Coast, because it's usually cheaper to bring it from Europe than it is to the Gulf Coast, thanks to Paul's favorite law, the Jones Act.
Exactly right. Don't worry. I'm working on that. All right. I know it's a supply and demand kind of story when we're talking about commodities here. Boy, it appears to me that OPEC Plus, their cuts in production have, in fact, worked. Can we give them some credit there?
I mean, it has worked slightly, but I think ultimately a lot of this has been geopolitical risk. And you'd think when you cut as much as they have, over 2 million barrels a day, theoretically, you should have a larger impact. You shouldn't be struggling to get to the 90s. And obviously, external events conspiring to that. I think it's very clear when you look at the U.S. that the demand is not, the demand side of the equation is not sticking to the $90 plus oil or even the high crack spreads as well. If you look at just how much gasoline came off in July, and now in the past few weeks is even more so, it's clear that the U.S. consumer, and that can be a kind of the benchmark, the bellwether for others, is struggling with elevated fuel prices.
Hang on, when you say the Jones Act, are you talking about the Merchant Marine Act of 1920?
Yes.
This is a law requiring that all goods transported on the water between two U.S. ports are transported on either ships that have been constructed in the U.S. Oh, well, not either. Both ships that have been constructed in the U.S. and that fly the U.S. flag and that are owned by U.S. citizens and that are crewed by U.S. citizens and permanent residents. So I guess that makes it more expensive sometimes to ship crude from the Gulf up to the East Coast.
So if you live on the East Coast,
every time
you got shale oil in your backyard and gas, you can't get it.
Where the pipe?
Exactly.
But you can't pipe that
You can
stuff?
get it, but you just have to pay for U.S.-built ships crewed by U.S. servicemen owned by U.S.
But a pipeline. You don't
They
have a
can't
pipeline?
build a pipeline. They won't let you build pipelines
There's a
anymore.
pipeline running through my backyard.
Yeah, but you live in New Jersey. There's nothing to destroy there, right? Through the rest of America,
I beg
there's
your
important
pardon.
wildlife.
Fernando Valle, thank you so much. We appreciate it. Good stuff. Yeah, I mean, I don't know. Build a pipeline from the shale of Pennsylvania into John Tucker's backyard into Jersey. Problem solved. I don't know why we don't do that, but that's the Jones Act.
Well, it can't go from Pennsylvania, right? We're going to refine it.
I don't know, build a refinery.
I thought you had to go down to Oklahoma to do that.
Well, we'll build a refinery in New Jersey. I think
Well,
we got plenty of them.
millions of
We've
them.
already got plenty of them.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Matt, I'm going to show off my telecommunications chops to you right now. Wide area networking. It's known as WAN.
WAN.
Yep. Local area networking.
LAN.
Okay,
LAN?
see? I don't know. It's kind of all I kind of know. We got these little nodes all over the office, and apparently they tie you all together, and so you can do the wireless and wireline and all that networking stuff. But the people who actually do that for a living, one of those gentlemen is right here today with us in our Bloomberg Interactive Broker Studio. That's Phil Mottram. He is Executive VP and General Manager at Aruba, which is a Hewlett Packard Enterprise company. Phil, thanks so much for joining us here. I know you're based on the
You know what? I just
West
thought,
Coast.
I just kind of occurred to me, Phil, the work you do is important to nearly every single person on a daily, if not an hourly or minute-to-minute basis. And no one understands what you do. Is that
me included?
Yeah.
No.
No, is that
you're exactly right. Yeah, no. We reckon that. So these access points on the ceiling that connect your Wi-Fi devices and get you to the internet. We've shipped about 28 million of those since we started as a company about 20 years ago. And we believe
this is Aruba or Hewlett Packard?
No, this is Aruba before Hewlett Packard Enterprise acquired us. And we think at any one time, you would have 100 million people connected to these access points around the world. And they'll be in schools, hotels, offices, emergency services. I mean, this stuff is real. So, yeah, you've got to have a really good, stable platform for customers.
But when you're at a cocktail party and someone says, what do? You don't start talking about, wireless SD-WAN solutions so that we can edge to cloud.
Like you've never seen me at a cocktail party.
No, I mean, how do you make it easier for
Yeah, look, I talk about the fact that I work for Hewlett Packard Enterprise, which is a great technology company, and we focus in 3 areas. We focus on hybrid cloud, we focus on AI, and then we focus on networking. And then after that, I'll talk about the fact that, we supply these access points, and then the access points link to something called a campus switch, and we provide those, and then they link to a network that you just talked about, which is SD-WAN.
Yep.
So, I talk about the fact that we kind of follow the chains and the network, and so that's where we expand our technology.
How has that business changed with the pandemic and more people working from home and remotely and all that kind of stuff?
Yeah, I mean, look, the good thing about being a network provider is anytime something changes in a business, there's an impact on the network. So people go and work from home, and it's like, right, we need to change the network so that people can communicate remotely. People come back into an office, you need to upgrade the Wi-Fi. People move workloads out to the cloud. Whenever there's a change in business, there's a resulting impact on the network, and that's good for our business because that's what drives demand.
So is the growth for your business just, I would think, like in emerging markets? Is that where the growth might be?
No, it's everywhere. I mean, which organization doesn't want to stay on top of the network? I mean, this network technology.
You also,
correct, yeah, because it goes faster. You go from Wi-Fi 5 to Wi-Fi 6 to Wi-Fi 7. So these upgrades obviously make the network go a lot faster. Obviously, people are more concerned about security as well now. So we made some investments in security. We bought a company called Axis Security about 4 or 5 months ago because this stuff is very real, isn't it, for customers? You want faster networks, and you want to make sure they're secure.
So who is responsible? That's a good question. Who's responsible for the security of a network? Is it kind of like you guys? Is it me as the customer?
Well, it's a team, isn't it? So you as the user, if I'm the network manager, right? Obviously, I have a responsibility to make sure there's a secure network. But as users, you need to make sure that you're not downloading the wrong apps and getting caught phishing or whatever it might be. It's a collective responsibility to make sure that the the information in an enterprise is secure.
I'm always worried about getting caught edging to cloud.
Sure. I know.
What's the AI component of your business?
Okay, so we do a lot in AI. We've got quite a good history in this area because we bought Cray supercomputers.
Heard about them?
Years ago. And so they're, I mean, world experts in building these kind of big models for weather systems and all this sort of stuff. And then obviously more recently you've seen a huge demand for AI. And what we're doing there is using some of that knowledge and smarts from Cray, blending it with the infrastructure that we provide, and then really supporting customers as they develop their large language models and other developments in the AI space. So we see huge demand right now as a company from AI.
How do you make these things more sustainable? Because AI in these data centers is going to use, like, it's going to dwarf the electricity use of Bitcoin, which already gets slagged off by everybody coming on this program. So how do you deal with that demand?
Yeah, I mean, just generally across the board, by the way, we are huge on sustainability. And I think we're only, I mean, it's a little bit sad to say this, but we're one of only 2 technology companies that have actually committed to hitting net zero targets, right? But it's a big part of what HPE does as an organization. So we take it very seriously. On the AI space, we do like water cooling and that sort of stuff. And we pick data centers that are really efficient to make sure that we're sustainable. And then in the network space, we do all sorts of things. I mean, we'll actually take back old equipment from customers and recycle it and then sell it onto other markets. So actually, in the last 2 or 3 years, we've taken back 8.2 million devices, so old pieces of network equipment, and in 82% of cases, we've been able to refurb it and sell it onto another market. So sustainability is huge for Hewlett Packard Enterprise.
Who's your competitor in the networking business? Who are your competitors, plural, I guess?
I mean, look, there's a range of companies. Cisco's obviously a big player in the network space, and then you get some other startups as well. But, Cisco's probably the big kind of
what's the revenue growth driver for you? Is it more customers? Is it more revenue per customer? Both? Kind of what do you...
Yeah, it's both really. I mean, obviously you saw, as I said earlier, when you see big changes in the way that people work, then that drives demand. So as I say, when the pandemic happened, people started to work from home. That meant people had to spend on the networks to make them secure. Now that they're trying to get people back in the offices, people are only going to come back to the offices if you've got great Wi-Fi coverage in the office. Otherwise, why would you come back in, right? So these changes, they drive demand. And where we benefit is that means existing customers are buying more, but we're attracting a lot of new customers as well because, we kind of link all this, without getting too technical, we link all of this stuff together through a platform called HPE GreenLake, and that allows customers to be able to provision and manage network and IT all from one platform. So that brings in new customers as well for us.
Fascinating stuff. Somebody's got to do it. I know I can't.
Why Aruba? We only have 10 seconds, but why is it called? I mean, it makes me want to go to Aruba.
Why would anyone buy Aruba? No,
I don't know. Why is it called Aruba?
Why is it called Aruba? So I think the founders, they were looking for a name, and I guess one of them had been on a nice holiday or something.
There you
so
go.
yeah, that was the main reason, I think.
I'm going down in January.
Very nice.
Lucky man.
I love
Lucky
Aruba.
Man.
Phil Mottram, thanks so much for joining us. Appreciate it. Executive VP and GM at Aruba, a Hewlett Packard Enterprise company.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
It is that time of the week when we ask the question, what is Matt Miller driving?
Yeah. And I think
we
it's
can go a
appropriate.
million different ways on this, but I'll let you take it.
Well, I love that Denise ended her report with
Yes.
shares of Harley Davidson, because I was just looking at the comp function on Harley Davidson. That's the function that looks at a stock with total return over a certain period of time. It defaults to 5 years. And although it's not apples to apples, Polaris stock has outperformed Harley Davidson stock over the past 5 years. With total return included, you see Polaris stock is up 18% and Harley is down 15%. Now, I say Polaris because they make Indian motorcycles.
Okay,
and that's
very
what I'm
cool.
riding.
Oh.
That's what I'm driving this week. I'm driving an Indian Chief Bobber Dark Horse.
Nice.
But suffice it to say, it's kind of the mid-range in terms of weightiness of bikes for Indian. They make a flat tracker that's extremely extremely popular.
Okay.
And then they make a Scout, which is kind of the entry level. It's a very like cool looking dark old bobber style. The Chief is a little bit heavier, maybe for a little bit longer range rides. And then they make the big bikes that are a little too big for me. But I want to bring in Mike Dougherty. He's the president of Indian for Polaris. He joins us right now. I'm going to say out of Medina, Minnesota. Is that right?
Yeah, you got it right.
Nice.
Exactly.
So
nice to meet you guys.
Good golf course out there.
I was talking to Mike earlier and told him a little story about me test driving this bike, and I'll share it with you. It's kind of corny, but when I moved into Scarsdale, I had all these guys to deal with, right? My mortgage broker and the contractor and my insurance guy. Insurance guy is totally cool. He lives in the neighborhood. He's got kids that go to the schools, and I was like, dude, let's go get beers. And he was never like ready to bro out, you know? He was like, yeah, no, I'm too busy.
Okay.
He never really talked to me that much, even though I'm insuring all my vehicles with him, you know? But the other day he comes by to pick up some plates, and he says, man, that is a cool Indian you've got parked in your driveway. Now all of a sudden he's calling me. He wants to come over. He wants to hang out, you know?
Bros.
He wants to be a bro. And this is like, to me, this is one of the coolest aspects of motorcycling. Like it's beyond just obviously a method of transportation that gets you from A to B, or a lifestyle. It's like really creates a community, and I love the journey that the Indian brand has gone since Polaris took it over. You've also, Mike, really been selling a lot more of these, right? I've seen a lot of stories about the jump in sales for Indian. You're taking market share away from Harley Davidson, and you're becoming like one of the big American players. You are arguably one of the two, right? Tell us about Indian.
Yeah, absolutely. Yeah, and welcome to the Cool Kids Club. I'm glad that you like the bike and you've had some positive experiences with it. It's Indian's on a roll right now for sure. We launched the bike once we purchased the brand in 2011. We came out with our first versions of the Indian in 2013. So really just the last decade, but we've been gaining share really in every market we compete in and most every segment for the 10 years since. And we continue to take share from the big player, but people are thrilled with their bikes. And the Chief is kind of the bike that kind of comes right in the middle. It kind of plugged a gap we had in our product lineup. So now we really have a range of bikes for every type of rider right now.
So to me, the Chief is my favorite. It's the sweet spot of the line because I want a cruiser. Yep. I don't need a big bagger, with a full fairing. Although some people, want those for obvious reasons. But the thing that I think sets Indian apart is the success that you've had with the flat tracker, the FTR. It's a 1200, and the success that you've had in flat track racing, which is kind of where Indian made its name. So tell us about that bike and that endeavor.
Yeah, racing goes way back, to the origins of the brand. And when we came back with the brand, we knew that we had to compete and really live up to the performance heritage of the brand. And we've been kind of dominant on the racetrack, in particular the flat track racetrack. We just won our fifth series, and we've got a champion in Jared Meese that I think he's tied for now for the all-time championship. So, we've been winning, dominating on the racetrack, and then we've also been super competitive in the King of the Baggers and the other racing circuits that we do. But the flat track's a great bike. It has global appeal, and a lot of people are loving it right now.
Hey, Mike, who's the prototypical Indian motorcycle buyer?
Good question. Most of the people that buy an Indian, it's not their first motorcycle. They've been around motorcycling for a while. They're experienced. They know what they want. Maybe want a more premium experience, either ownership or riding experience. And so they jump onto the Indians. We sell more of Scout than anything else. So that's our entry into the brand. And then they work their way up over their riding lifestyle to the Chief and ultimately to a Roadmaster or one of our touring or bagger bikes. But experienced, knowledgeable people that are probably looking for a little bit more performance. Our bikes provide more performance.
What's the key to, you think, the growth that you've experienced, the market share you've been able to take? Is it the racing? Is it, just the design and production of the bikes? Is it the dealership network? I've got a very cool dealer by me, Shane at White Plains Indian. He's like obsessed with the brand. What is it you think that's helping you win?
All those things combined, really, it's important, right? You got to honor the brand in the right way. You need to give the consumers a premium ownership and buying experience. Our dealers are first class. I'm glad that you've had a good experience with them. That's normal for us. And we build beautiful motorcycles. The first thing that attracts people to Indian is the style of the bikes. That they look cool, they are cool, and then once they ride them, they appreciate the performance that they have. And once they own them, we have world-class satisfaction scores. So once you get on one, you kind of stay on one. You convince your buddy to kind of go check them out, and that's how we've been winning in the marketplace, is word of mouth, and continuing to have world-class satisfaction.
What's the experience like coming out of the pandemic? Because I think for a lot of people, when we went into lockdown, a lot of people were like, man, I got to get on a motorcycle and get out there, because you're definitely social distancing, right? Paul,
right.
Paul was on one of those bicycles. What do you call those things?
E-bikes.
No,
what?
The with Jen Sherman and the
the Peloton.
The Peloton,
yeah.
Right? But he was doing a lot during the pandemic, and then he's not doing it so much after. Do you have the same experience with motorcycle sales? Did they soar when everyone had a social distance, and had they softened a little bit since?
Yeah, exactly. We couldn't keep enough bikes in stock. It was hard enough trying to keep the factories running, but the demand was through the roof, and so a lot of people had to place orders for them and wait for them to come. That subsided a little bit. We're kind of back to a normal sort of pre-pandemic level. The rising interest rates, makes it a little bit challenging for some customers to finance their bikes, but we're still seeing healthy demand, and we're still gaining market share. So we're in a good spot, but it was a crazy couple of years for sure.
Are motorcycles, are they going electric?
Some of them are not the category that we're in,
Okay.
that people like to go a longer distance. There are some in the smaller urban setting that are going electric. The challenge right now, most brands have an electric offering or will be, or have announced them. But finding that perfect balance of where the technology of the battery power and the cost of that marries up into a motorcycle that's affordable and kind of can thrill a customer, that perfect balance isn't there yet.
Yeah, electric power and self-driving capabilities are for cagers.
Yes.
You're a cager.
I'm a cager. Yes, I am.
I don't need that.
Yes, okay.
I need the freedom, and especially the big V-twin,
Yep.
the American
Yeah.
experience. It's
Sure.
It's so cool. The Thunderstroke engine, the development of that has been awesome for Indian. So I appreciate you guys giving me a chance to ride this bike. Absolutely love it. Mike, thanks so much for joining us as well on the show. Mike Dougherty there is the president of Indian Motorcycles for Polaris.
Cager, I've never heard that term. It's a derogatory term for automobile people from motorcycle
Yeah,
people.
somebody
Okay.
who sits in a car, texting during his commute,
Yep.
which is what pretty much everybody does.
Yes, we do.
Thanks for listening to the Bloomberg Markets Podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.